Hello, good morning, everyone. My name is Sean Severson, co-founder and president of WATAR Research and head of sustainable investing research. Today we have back with us Dr. Raj Gupta and from Electrovaya, ticker ELVA on the NASDAQ. As a reminder, we have a substantial amount of content on our website and research on our website. You can visit at www.watatarresearch.com to get more information on the company as well as prior Fireside chats. Today we have a really interesting topic. The company has been very successful historically in material handling space on their Infinity battery platform. Over the past couple quarters, Raj started talking more about commercial applications. And today's topic, we're going to talk some more about that. Very interesting new market for the company, and obviously another great opportunity for their proprietary battery system. So if you're good to go, Raj, I'm going to go ahead and jump into the questions.
Sounds good, Sean. Thanks for the intro.
Great. Well, it's an easy one to start with, which is why is this optimal for commercial applications? You've talked a lot about material handling. I think investors that have been around the company a while understand the applications and the proprietary nature of the battery and why it's suited there. How does that translate into the commercial market as well?
Well, first of all, I think people don't realize how amazing the Infinity battery technology platform is. So essentially what we have here is a technology which is a platform technology. We apply it to any chemistry, any cathode, any anode chemistry. And the impact of this technology is we can extend the longevity of that battery by up to 5 times. So if your battery would last 2 years, now it's lasting 10 years. So it's a huge impact just on life cycle. And then the second impact is on safety. We dramatically improve the safety of that lithium-ion cell from a first principles point of view. So here you've got a very interesting technology which has that impact. The cost differential is very small, but the impact, especially for these commercial applications, is astounding. And it's been proven. We've proven it in both with third-party lab testing. We've proven it with OEM testing. And most importantly, we've proven it in the field. So we have batteries that have been deployed since 2018 that use this technology that are showing minuscule change in performance, almost negligible change in performance over that period of time, which is unheard of in the battery space. So I think that's put us in a great position, not only to continue to expand our footprint in the material handling and robotic space, but also look at some of these additional commercial applications.
And when we talk about commercial applications, let's talk a little bit more about what that means. I know we're going to get a little bit into verticals, but just for clarity's sake, historically, material handling, and when you say commercial, you're talking about what kinds of applications, and then we'll dig into that a little bit more later.
Yeah, so basically, this technology is a good fit everywhere. But who can we sell this product to and get a healthy, good gross margin, right? And that's what the company's after. That's what we've proven. We're getting the highest margins in the battery space probably right now. In terms of profitability, I beg you to look around. You're not going to find many battery companies that are, if any, that are breaking even. So the material handling market is a existing, mature market that has been electrified for some time. It's also growing quickly, right? So e-commerce is growing quickly, warehousing is growing quickly, and automation, and there's lots of changes happening in the industry. But because this was mature, the buyers essentially were cognizant of life cycle cost, right? And so it was a much easier, not easier, but it was easier to communicate with those buyers than, let's say, a new application. Let's say you're looking at an electric bus. No one has made electric buses yet in scale, and so the buyers are, what's the difference in your battery and the next battery? It's a harder sell. What we're finding now, though, is those other commercial markets have gained quite a bit of experience over the last 2 to 5 years. And that experience has been recall, safety issue, battery failure. You Google it, it's lots of that. And so now they're like, okay, we need a better battery, and it's great timing for Electrovaya to go into additional verticals. We're looking at transit buses in a big way. I've mentioned that before. We're getting some good leads there. We're also looking at other specialized commercial vehicles. We just launched our high voltage system product line. Great timing. We've already received some orders for those. We'll start shipping later this calendar year. And we're really putting an effort in the business development activities to gain new partners for those types of systems. So basically, we're targeting any type of application that needs good safety, which is everybody, and also ideally applications that are using these batteries more extensively. So like more than 10 hours per day is really where they'll see a life cycle cost benefit. And so there's plenty of those applications out there. There's more than I realize. We're also talking to a few mining companies as well. So a huge amount of opportunity.
And let's spend a minute on that sales cycle. So, one of the things I think investors, and myself included, have always been used to are very long sales cycles in things like buses or anywhere in transportation and automotive. This seems to be moving quite rapidly. And I guess there's certainly adoption of electrification, and let's take commercial buses, right? But as you look at how the sales cycle works, how does the selling process start for you? And I know you mentioned that you talked about on your last couple conference calls. The cycle there is moving quicker in terms of, you're not, you'll be on a generation in 2026, or, kind of how this usually works. So we spend a moment talking about how the sales cycle starts for you, what the process is, and in this case, why, at least in my view, things seem certainly to be going faster than normal for adoption and sales into this market, potential sales.
So for the material handling space, that sales cycle has shrunk significantly. When we started 4 years ago, sales cycle was very long. We would trial systems at multiple distribution centers, and you get a small order, and then maybe a year later you get a larger order, and so forth. That cycle has shrunk dramatically. Now we're seeing Fortune 100 companies order reasonably large numbers of battery systems without even having trials. So that is a major change. We're seeing that to continue. With these other verticals, for instance, when you're designing a battery pack for a specific bus OEM, there's going to be a fairly large, lengthy process of let's say, pre-production, where you're doing the engineering work. So you're looking at roughly 12 to 24 months of development periods, but that's important. You need to get the product integrated correctly into those applications. And the more sophisticated OEMs have more of a process. Mm-hmm. So that said, what we're expecting is the company's grown dramatically in fiscal 2023. We're doubling revenue. We expect to continue high growth in fiscal 24, but that will still be mostly material handling. But a lot of pre-production, a lot of work in the background on some of these other verticals, which you'll see the impact of that in fiscal 25. So we have a lot of growth ahead of us.
I think one of the interesting things too is if you look and try to model this out, when you look at these potential customers, we'll stick with buses, let's say, that seems to be one of the more prevalent shorter term applications. These partners or OEMs are already selling a lot of electric buses, right? So these aren't bus companies that are running prototypes and things like this. I'm assuming that it has a larger installed base, let's say, and is sold and has meaningful volumes every year when they sell electric buses. Is that true?
Yeah, I mean, the market is still nascent. So in North America, at least, the majority of deliveries are still IC engine based. However, that is rapidly changing. Electrified vehicles are likely to become the majority in the very near term. However, there have been some problems, right? So if you look up any of the buses that have had meaningful market share, there's 3 or 4 companies there. Most, if not all, have had battery problems.
Right.
And I think this is in my opinion, this is a testament of you're trying to use automotive passenger vehicle batteries, scaling them up, putting them into buses or trucks or heavy duty, and it's not really a good fit, right? So you need a lithium-ion cell from the get-go, which is designed for those heavy use applications, and that's where Electrovaya steps in. So I think we're not guaranteed to win all this business, but I think we're in a good position.
And I guess I look at it from the perspective of when let's say you win business and you're on a new platform, it's not something the volumes would come sooner. And I'm just looking at this from the fact that buses are already being sold, right? So when you come in and now if you become the battery of choice for that bus platform, it's automatically has a market developed for that bus. And what I'm getting at here is, if you try to model this out, we try to build a model on it, we look at how the adoption curve would be for you inside an OEM relative to volumes, right? To get those all connected. In this case, because you're displacing an existing battery, it would make sense to me that you would certainly see maybe a more rapid growth by just capturing that market share that already exists out there in what would be new bus sales in this case.
Correct, yeah. There's an opportunity to leapfrog there. As soon as the engineering development, we also, if I look back a couple of years ago, we saw these opportunities on some of these OEMs, and the pricing expectation was so low, we declined to really push it. It's an opportunity cost. I could sell a system at 30% gross margin on the material handling side, and at the time it would have been like close to zero margins on these applications. So we decided not to do it. The companies that did do that, they lost a lot of money, and some of them aren't even around anymore. So that expectation probably is no longer there. The requirements of safety, longevity are becoming more cognizant for the buyers. So I think it puts us in a good position. Yes. So you're looking at going from zero to large numbers rapidly in the space, rather than sort of a more sloped curve, which we see.
Yeah, like let's run a pilot program, see how that goes, put 1 million miles on it, then let's go, order a few more. There's an install base. I think that's particularly attractive. Other areas like mining, like you mentioned, are just starting, right? So that's an interesting application, but the commercial volumes aren't there, so they're still in that process of pilot and testing. But some of these other ones are very interesting because there's a market today that exists that would be meaningful for a company like Electrovaya.
For sure. There's benefits of both. Mining is so some of these mining vehicles are operating 23 hours a day.
Yeah.
I've talked to a couple companies, mining companies specifically. There is significant demand for products that don't exist. So they're going through diesel engines like no one knows, right? And they're going through copious quantities of diesel. Electrifying that is not just going to be good for the environment, but it'll probably be good for their pocketbook. So there is a fundamental fit. And it's a fundamental fit for Electrovaya's specific technology. I mean, if you put an automotive battery in one of those vehicles, it's going to last 6 months to a year. Not going to work. So you need a long, durable, long cycle life technology for those types of applications. So it's something that we're definitely interested in. Yes, it's going to take time. It's going to be more development, but it could be a very good premium product, high margins. That's as what I want Electrovaya to be in 5 years' time is not a volume player. We want to be a value player. And if you think about it, look at companies like Caterpillar. They have a market cap 3 times bigger than the automotive big three.
Right.
So they're selling value. They're not, you're not going to get a discount on
Right. I actually visited a couple mines that were looking at, some of the piloting for electrification of some of the mining equipment, and they were in areas that had hydropower, right? So charging these things were basically free as well. So there's a lot of locations or mines where you have very low electricity costs. That this is certainly a very intriguing option versus shipping diesel, 100 miles from the closest depot, up to some place in northern Canada or sort of central northern Canada to mine, right?
The diesel replacing, it's not just mining, it's even like we're talking to one group about these aircraft starter machines.
Oh, yeah.
Those are currently diesel. There's no reason to do it. But it's a high duty cycle. You've got working all day long. So that's another application we're keen on, that we see opportunity, even construction sites, for just the power, right, for powering all these machines. So there's a heck of a lot of opportunity. We're trying to, there's only so much we can do. However, we're expanding our engineering team significantly. We put a release out there, and that is going to enable us to tackle more applications.
My next question, we touched on a bit. You talked about profitability, and obviously profitability battery companies don't always go in the same sentence, but in your case they do. So one of the questions we get frequently from investors is they understand the economics and how you've done in material handling, right? Because proof is in the numbers. You see it. Well, last quarter, you saw it before. I mean, it's really there. Now as you go into these new markets, be it stationary, be it mining, be it buses, the economics and the profitability for you stress is very important. But can you just talk about maybe compare and contrast how that would look as these other markets come into your mix in a greater percentage over that, obviously not short term, but over the longer term?
So first of all, the company's reached an inflection point. I'd say we've passed that inflection point. So we've had 2 back-to-back quarters of net profits. We've been EBITDA positive throughout the last couple of quarters as well, and plan to continue with that trend. We're not going back. At the same time, the margins on the material handling battery systems, we are seeing opportunities to further increase that.
Mm-hmm.
And as we get into new markets, if those markets cannot achieve similar margins within a few years, those are markets that we don't want to go after. We want to go after markets where we can make healthy margins, and markets where we can not just sell a product in, but provide additional services as time goes on. So we want there's lots of opportunities we see. Now, we don't want to go after markets where we're going to make a 10% gross margin and volume. And that's what some of our competitors do, and that's fine. But we have this cutting edge technology, which is a huge differential between us and your standard lithium-ion battery players.
Yeah, and looking from the outside world, investor and analyst perspective, stuff like that shows up in the margins. It's very simple. Companies say they have a proprietary product and it's differentiated, but then they're at commodity margins, right? So there's a gap in there, and I think this is one of the unique stories because of that. It really is showing that there's some differentiation there and something that is a high value to those customers because they're willing to pay an appropriate price for it. And I think like you said, it took some time in maturing in the industry, right? You talked about things like safety and cycle life and all these other things that once you get through this initial gold rush, so to speak, in electrification, then everybody has to take a step back and say, whoa, wait a minute. I didn't pay very much for these batteries and look what's going on. So are they really cheaper in the end? And I guess you're saying as a steward of the company that when you address these new markets, that's at the forefront of your mind. The profitability, obviously we're going to get into my next question on manufacturing. I'd like to touch on that, but so something investors can expect because that's always at the forefront of your thought.
Yeah. No, and the other advantage of having such a differentiated and superior technology is we're hard to displace. I mean, if you're just using standard, let's say you're a battery integrator and you're buying standard lithium-ion battery cells from Asia, there's no reason in the long term that whoever you're supplying packs to isn't going to make those packs in the end.
Right.
Electrovaya's case, we don't just make the systems, but we make the core technology that goes into that, and it's so differentiated, we're not easily displaceable.
Right. Sticky business. You said some other services and things around those. I mean, people love recurring revenue. I don't know if that's what you're referring to, but what would be some of the things you do?
That's exactly what I mean. So we are already selling data analytics to some customers. We're working to expand that. So data analytics is great, seeing how your fleet's working, but there's only so much you're going to pay for that kind of service.
Right.
When you take it to the next level, which is adding demand response capability, energy storage, virtual power plants, that's when things get cool. That's when people will pay you significant fees for those types of services, and that's what we're working to develop. We will be rolling out some trials later this year, specifically on those.
Great, nice. So my next question stems from a good problem, lots of sales. Let's talk about manufacturing, update in New York State, and what's going on there. But how do you sit today in terms of what you can produce? And I'd also like to ask, is there a higher contribution margin to scaling today with the existing capacity, or is it something we should expect, relatively flat as we go forward? And then what's the next step for as markets take off in 2024 and certainly in 2025? How do you sit?
So great question. So our supply chain is rock solid, right? We have developed a robust supply chain to make our lithium-ion Infinity products. And that's a fairly complex supply chain. We're making things in Japan, we're making things elsewhere, and then of course assembling in Canada. What we've done over the last several months is we've significantly improved our efficiencies both on the supply chain side as well as in our operations here in Ontario. And we put this in our last press release is essentially our capacity in Ontario has gone up significantly.
Right.
We're achieving our fiscal year guidance on a single shift, no overtime, not really sweating the system. There's significant opportunity to increase that. We can do all of fiscal 24 targets out of this existing building, and then some. So coming to our U.S. expansion, that is really the primary purpose of it is to enable the company from 2026 onwards, also to access the Inflation Reduction Act incentives, and also grow our footprint in the U.S. That is where our business is. That's what our future. So that's the main strategy. Now, with respect to the need for Jamestown in the next year and the next 2 years, it's not really mandatory. I mean, we have more than ample capacity, but it is in our strategic vision of the company going forward. So we do expect to get it financed. We're not in any great hurry. We're going to wait for the terms to be Sure. For the company, we're not going to, the business is doing so well right now, and it looks like it will continue. So we just need to make sure whatever deal we take is in the best interest of the company.
That's a great lead-in into my last question, which is about capital, about spending, cash flow. A lot of companies are constantly raising survival capital, not growth capital. You guys seem to be in a strong position with the balance sheet plus being profitable, right? So what is your view on the capital situation today? Do you need more? When would you want it, and what would you use it for?
So right now, the market, our stock, the company is doing better than it ever has been. Electrovaya's business today, in its entire history, has never been better. But the stock hasn't been performing that well. Market hasn't been performing that well. It is what it is. Good news is we don't need to raise cash.
Right.
Cash, as you mentioned, we're not burning cash. We're doing fine. When it comes to expansion or upgrades and facilities, we plan to use friendly debt where possible.
Sure.
We put out applications, of course, for Jamestown, and even for our operations here in Ontario. We don't want to use our operating cash for those types of investments, and I think there are opportunities to cover that with these other funding mechanisms. Going forward, I expect sooner or later the market to reflect on how well we're doing.
Yeah.
Things will improve. But the Jamestown expansion is going to be primarily financed through other means. We are also planning to refinance the Canadian working capital debt facilities with a larger bank. That process is well underway and expected to be concluded soon. So that's also going to benefit the company. It's going to expand our working capital by a fair margin, and also reduce our finance costs because the interest rates will drop.
Lower interest, sure.
So it's overall a win-win. Lots of good endeavors that we're currently working towards.
And coming up on the half hour, but before we go, I do want to remind investors, the company only recently uplisted to the NASDAQ, so this was a critical event in the company's growth and maturity, and certainly opening up the investor base substantially. But that's a big deal, and I think as more and more conventional U.S. investors can take a look at the stock, it's certainly helpful because the story hadn't been well known amongst U.S. investors before, but I think that's changing rapidly. So great, congratulations again on the success of the uplisting, but an important event in the company's strategy and history.
Thanks so much, Sean.
And with that, if you have any final closing comments, I'll leave it to you, and we'll wrap it up for today. Appreciate your time.
No, I think it was a great discussion. I enjoyed it. I have really nothing further to add, but if there are any follow-up questions from any of your audience, I'm happy to tackle that when they come.
Great. And before we go, I just want to remind everybody the views expressed in this fireside chat may not necessarily reflect the views of WATAR Research and are provided for informational purposes only. This fireside chat may not be distributed or reproduced without the written consent of WATAR Research and should be considered research, should not be considered research nor a recommendation. WTR is an investor relations firm, not a licensed broker, broker-dealer, or market maker, investment bank underwriter, or investment advisor. Additional disclaimers can be found at www.watarresearch.com. And I want to thank all of our participants today. Great discussion, as you said, Raj, and very exciting time. So hope to have you back soon. Thank you, everybody, for joining us today, and have a good day.